better than feared. I mean, because specifically, if you look at AWS numbers, you look at the top line growth, Armageddon expectations coming in. Remember, last quarter they cleared the decks, and the narrative that's starting to emerge in big cap tech earnings with Microsoft, with Amazon. We saw it with Netflix as well. I think you had a lot of bad news baked in. What you're seeing underlying, not falling off a cliff, that's what the street's focused on. But just like Jason said, AWS, that continues to be the key in terms of the cloud piece.
That, Jason, being AWS, the cloud part of Amazon, the real growth engine, if you will, of Amazon, that's where the results need to remain strong to make up for any weakness of what we said was being driven by an uncertain macro environment, the pull forward of all those sales during the pandemic, and now you're riding into the headwind of a macro slowdown.
Absolutely, Scott. I mean, AWS is so important, as you mentioned. I mean, that's the engine behind the company here. And I think with the guide being a little light, I think that's a read into the consumer. And as I mentioned earlier, AWS is slightly more levered to the consumer and not enterprise. So it'll be really crucial to see that number continue to grow at a really nice pace. And as we've seen, as Dan mentioned, go ahead.
Dee, you have more on cloud? Exactly what we're talking about here. What do you see now?
So I wanted to jump in. It actually was better than expected. So that's $19.7 billion versus 19.6. So a slight beat here, but there were some worries going into the report that even though Microsoft Azure was strong, there's a higher mix of enterprise. So perhaps AWS wasn't quite as strong, but continues to be that reliable engine of growth and profits for Amazon. I'll come back to you with some more stuff in a bit, Scott.
I know you will. Look forward to that. So here you go. I mean, the most important metric, that's why the stock's up 10%.
Yep.
Right? You have to have the growth engine of the business make up for any shortfalls in the other part of the business as we're riding into the headwinds we just mentioned.
Right. And so I think it's real interesting. You see Meta as a juxtaposition with, they're directly more involved with the consumer. They're down. You still have the growth engine of Amazon, obviously, on with enterprises with AWS. And so I think you're going to continue to see this dispersion with the FANG stocks of the Microsoft. We'll say good read from Amazon, and we'll end the day with Apple, which probably is going to be strong as well.
Let me just let everybody know as well that Intel's out. Our reporter on the case there too is going to come on. I see a miss here. And a significant one in terms of revenues. And you can see a stock that's down some 7%. You talk about a host of issues that this company has been dealing with, too. Lack of or losing market share, I should say, right into a PC slowdown caused by these same headwinds in the macro environment that we've all been talking about. And, oh, by the way, as the company is trying to transform itself, which the CEO, Pat Gelsinger, has made awfully clear over the last many months since he took the helm of that company. You wouldn't own this, I don't think, for anything now, would you?
No, I mean, I think Intel is frozen in time. And I think that's the issue. And if you look back 5 years, Intel, I think over the last 5 years is up around 12%. It's up $5 in 5 years versus NVIDIA's up about 300%. AMD's up even more than that. And that just shows you they just missed two big important cycles. And I think Pat is coming in obviously very brilliant. They're going to have to spend so much money. And so I continue to think that even though you have a nice yield from a dividend, this is a value. This is not a value. This is a value trap, not a good value.
Yeah. Christina Partsinevelos, you have more here?
Oh, yeah, I have more. Let's talk about Q3 guidance for the company because that came in much weaker than expected. They are anticipating about 35 cents a share for adjusted EPS in the third quarter. The street was anticipating 86 cents adjusted. Huge miss there. Revenue guidance, too, for Q3. Around $15 to $16 billion in revenue. The street was expecting 18.6. EPS for Q2, so this past quarter, missed at 29 cents. Revenues, $15.3 billion. The street was expecting $17.9 billion. And we also had commentary from the company in the press release, and they're acknowledging that it is mostly, they're taking, I guess, the brunt of this. And I'm going to say, quote from the CEO, this quarter's results were better or were below the standards we have set for the company and our shareholders. We must and will do better. And they went on to say that it was because of the rapid decline in economic activity that was the largest driver. So again, they are acknowledging that this environment is challenging and admitting that the standards right now or the earnings were way below their expectations. So you can see guidance came in light, top and bottom miss. Back over to you.
Okay, Christina, thank you. War in Ukraine, that's a problem. China supply chain, ongoing problem. Currency issues on top of everything else, a problem. Visibility, Dan Ives, across a lot of these tech companies, a big problem. The CFO, just in June, headwinds, quote, much worse than what we had anticipated coming into the quarter. Obviously, from these results, that hasn't abated at all.
This is a horror show in terms of earnings. And I think, look, Pat's not a superhero because especially if you look at the PC exposure, remember Microsoft Cloud was the pillar of strength. PC we're seeing from our Asia checks continue to be weak across the board. Just like she was talking about, I really do believe AMD and NVIDIA, much better position. It's going to be an Everest-like uphill battle for Intel over the coming years.